Hello, everyone. My name is Dustin Kunkel, and I am with the Pikes Peak Small Business Development Center. I'd like to welcome you all today to the webinar, Considerations for Buying a Business. We're glad you could join us, and we hope you'll receive some great takeaways today as you consider whether buying a business is right for you. Very quickly, I'd like to introduce you to our organization, the Pikes Peak Small Business Development Center. Our center, along with over 1,000 other SBDCs nationwide, offers free consulting, practical training, and business resources to small businesses with help from the Small Business Administration. Our local corporate sponsors also include El Paso County, End Business Banking, City of Colorado Springs, Park State Bank and Trust, CenturyLink, and Vectra Bank. After this webinar, if you are interested in meeting one-on-one with an SBDC consultant, including Rob Amrine, the presenter of today's webinar, or attending additional workshops or webinars geared towards small businesses, please visit our website at pikespeaksbdc.org to get started. Today's webinar will be recorded, and you will receive an email following the presentation with a link to the video recording and slides, allowing you to go back and view it as often as you would like. For those who are watching this as a simulated live on demand, you should receive an email within a few hours where you can watch the video recording and where you can let it fast forward or rewind if needed. All right, I'd now like to introduce you to today's webinar presenter, Rob Amrine. Rob is a certified business intermediary for the FBB Group located in Colorado Springs. Rob helps small business owners maximize market value and realize liquidity by applying hands-on knowledge of business operations, proven processes, and the latest technologies. Rob earned his Certified Business Intermediary, or CBI, certification in 2017, and he successfully leverages his experience in many unique and profitable business transactions. So Rob will be sharing with us for about 50 minutes today, and then we will have a few minutes at the end to answer any questions you may have. I encourage you to type out your questions during the webinar, but we will answer all of them at the end. So yeah. So thank you today, so much for joining us today, Rob. Just give us 1 minute as we pass the controls over to him.
Okay, great, Dustin. Now, once I'm up in line here, can you see me now?
All right, I can see you now. I don't see your screen though.
How's that look?
There we go. Perfect.
Okay, great. Well, let's get started. Again, this is a really an initial look at for buyers looking at either a business they've identified or a business that they're maybe not sure what they're looking for. So we're trying to kind of help those that are just interested right now in the buying process, kind of what to look for, some overview. You know, we're not going to get a lot of the details yet because every business has its own unique challenges and nuances, but we'll take you through, give you a good first high-level view here, and then, of course, as Dustin mentioned, we can you know, dive in more with some more one-on-one consulting if that is what you need. So going through our overview here, we're going to go through an introduction that Dustin already basically went through a little bit, and let me. Still trying to get the slides to work. There we go. So we're going to talk about the where to look for businesses, evaluating a business, the business valuation portion, and then also some trends in today's market, which I think you'll find helpful for just where things are going. You know, 2020 is you know, a year of uncertainty, I think, for a lot of both buyers and sellers. So it's going to be interesting how it plays out with election year and all that. So first of all, you know, the FBB Group is formerly First Business Brokers. We're actually established in 1982 here in Colorado Springs. Ron Chernick is our founder and owner, and we've completed over 1,000 transactions across 15 different states. So while we focus in Colorado mainly, we have done deals out of state, kind of depending, especially as buyers and sellers come in from different areas and are referred to us. We have over 2,500 active buyers, which include private equity groups, individual buyers, and we actually have 6 intermediaries right now. We need to update the slide there, and 3 office staff. And so we continue to help businesses both buy and sell. And we are active members of the IBBA and CABI. IBBA is the international organization for business brokers, and CABI is the local Colorado organization. So moving on here to the next slide, a little bit about myself. I am a certified business intermediary, which is the designation the IBBA gives, and there's quite a bit of training in both online and classroom requirements for that, and has to be renewed every few years. I've been 6 years, this is my 7th year going with the FBB group. I'm a Colorado Springs native. I actually have an engineering technology background, so I can kind of get into the details as much as we want on certain businesses and different types of questions that come in. And I actually used a business broker. Didn't plan on it when I first bought my first business in 2004. And basically over some iterations, built that business up to 25 plus employees. And so I've worked with hundreds of small business owners. And we have, my wife and I have 4 great kids. There's a picture of us from this past Christmas. So we are busy and enjoy what I do, and get time with my kids as well, and just keep the main things the main things. So this is a kind of an illustration I like to use for the presentations. I think it's pretty telling. Now, a lot of times we're talking to sellers, and and I think this too, from a buyer's perspective, works well because a lot of times when you come in looking to buy a business, the sellers aren't really sure what is really coming at them. How can they trust that you have what you say you have financially? Do you have the right qualifications to buy a business like theirs? All that. So there's a lot of going into the process here, and it's just not showing up with an offer trying to just buy a business. And sellers are getting more and more, I think. I guess the term is just careful of who they talk to, because especially with a business has employees, and you just can't put a sign on the front lawn that the business is for sale. There's a lot of confidentiality issues. So we definitely look at best practices to help the process along. So where to look? Obviously, the current company you're with. Many owners, ideally would like to sell to an employee. Now that doesn't work out a lot of the times, or they're selling to maybe the next generation in their family, and those things come with their issues as well. So while it sounds good, there's a lot of things that can go wrong with that, and we've seen and came across many. We have an example of a business that was worth almost $3 million, decided to eliminate all their other options, go with just their employees, and the 2 key employees they talked to within 6 months had taken their key accounts and had started another business, and now their business was pretty much worth nothing. And so we always talk, to sellers to keep your options open. If you're a current employee, I think it's actually best for your owner to look at different options to help the process along. And if you're a good buyer and you have the ability to buy the business, then it'll work out in the end anyway. You're not losing anything by just keeping options open. The other option is online. If you haven't looked online for a business, BizBuySell is the big gorilla in the industry. Most of our buyer inquiries we get is from BizBuySell. I would say it's probably 9 to 1 in terms of buyer inquiries versus other sites. Businessesforsale.com, and Craigslist is another source for more of the smaller businesses. So it's another place to look. And there are dozens of websites out there, but those are the main ones. And Craigslist is probably a little more localized than the others. The other thing you can do on these websites, if you haven't been on there, is set up custom search criteria and alerts. And so that will email you every time a business comes in that matches your criteria. You could set it based on the region, city, county, the size of the business, even just purchase price or cash flow or whatever you're looking for. So those are helpful. I actually use those at myself to kind of see what's coming on market and what are things looking like. Another thing we recommend is that a buyer looks at different types of businesses. I mean, how do you compare business A versus business B. Well, there's a way to do that in terms of cash flow, but there's a lot of nuance. But the more businesses you look at, the better understanding you'll get of what you're looking for and really what's going to fit you well. But also, what else is out there. So maybe look at maybe 3 or 4 different businesses, even though you may have selected one and that you really like. Look at some others as well. And in doing that, be ready to sign confidentiality and provide personal financials. I can tell you when I'm working with a buyer that doesn't want to provide, too much information, it's a red flag. Now, of course, there's some back and forth there, and for those that are buyers that have, are more wealthy, they may be a little bit hesitant to provide that information too. But there's a point in the process where that has to be done. So we try to work with where they're at and try to build that relationship, sometimes just over the phone, to just make sure that they are qualified. And that's something that a seller is going to do for, if they're really watching it, are going to want you to provide some information just to show evidence that you have the ability to run and purchase the business. And above all, I think it's important to be patient. It takes time. And I thought this was interesting that in terms of stats, there's over, and this is according to Biz Buy Sell, there's over 10,000 small businesses change ownership each year. And there's probably, there's more that we don't hear about, of course, that go and they never go to market. But only 1 in 10 businesses on the market will actually sell. And that's a very small percentage. And that's on average, whether they use a business intermediary or not. And that equates, if you do the math there, to 100,000 plus businesses trying to sell each year. So we've talked to buyers who have looked at thousands of different type businesses throughout the year, looking for a handful that maybe fit their criteria. So as a buyer, you need to really be ready to focus in and look at many, and know that there's a lot out there that just aren't ready to sell, and knowing that many won't sell in this market. And we'll get to that a little bit later on why they don't sell. So if we're evaluating a business, the main thing here is you want to look for professional write-ups. And a lot of these you can kind of tell. I look at a lot of businesses online each day, and sometimes they're done well, where they're engaging, they give you enough to kind of understand what the business is about. Sometimes they're just way too long, they're very wordy, and it's more like they just keep talking, right, online, and usually that's evidence that there's an issue there, especially if they're trying to make it look better than it really is. So look at those. The other thing is looking for good numbers, good financial numbers. Avoid profiles that are missing too much, right? So if they just have an asking price, but they don't provide cash flow or asset value, or if they have a lease, you want a business that's filled out, pretty much all the information available. Now, sometimes the information, there'll be a missing piece. If there is no lease, there wouldn't be a lease amount or something like that. And if they don't provide the information in terms of, say, cash flow, then they really need to address that in the write-up and why that's not there. Maybe there is a good reason for not having that. And so that's something you have to be looking for. Be ready for some give and take, right? And I think it's kind of like the good analogy is dating. Be wary of sellers that give you too much too early, because they may be a little bit more just needing to sell for whatever reason, and they give too much at the wrong times versus just kind of walking along and helping you answer your questions as you ask them. So that's important as well, and something that you can watch out for. And again, talking to multiple businesses, you kind of get an idea of who's really worth talking to more versus the ones that you just need to let go. And another thing too, and I probably talk to, I don't know, sometimes a dozen buyers a day at times. And when I talk to a buyer and they've already talked to a lender or a banker on what they can afford, that's a really good sign that they're thinking about the process, and no, just not going for $1 million business and saying, hey, I'll try it and see if I can get the seller to carry the note, and and they only have a couple $1,000s of cash. For the most part, with SBA financing, you'll need at least 10% down, depending on the type of business. But if you can say that, hey, I've got, I'm looking at business, you have it on the market for $500,000, and I've got, say $100,000 available for cash, that's a good place to be. You don't want to have just the minimum. You just want to have some extra cash as well to show that you can, because a lot of times businesses will require, some working capital to get them to continue them and have at least some backup cash as you grow the business. So those things are good things to put forward. And of course, you're not gonna know, if you could necessarily buy that business per se, but having a lender saying, hey, you can afford up to this amount is always a good sign. The other side of it too is, valuing a business, based on the tax returns. If you can't get tax returns, there might be a problem. Early on, maybe it's just profit and loss statements, but we always start with the tax returns because that really shows where the cash is going, and then the profit and loss and balance sheets provide the detail. So that's something that you want to, definitely look for. And if not saying there's not a reason sometimes for tax returns this time of year, obviously 2019 tax returns aren't due until March. So there's a reason why they wouldn't be available, but you should at least get 2016 through 18 at this point and be able to, start looking at those. And, there's different types of tax returns, from, sole proprietors, which would be a Schedule C, to LLC S Corps, which would be, you'd have K1s with those and the 1120S, and then of course you have C Corps, which are the main corporation, and those type of filings. So, but get those tax returns. That's the best way to look at the numbers. And then, through this process, consider consulting a business intermediary or broker. Most intermediaries, like our firm, they're not working directly with buyers. They're working mainly with sellers. So a lot of times you can get a broker to maybe look at a business for you and give you a good idea of what it's worth, really for no cost, just kind of understand what is this worth. And then of course the business broker usually is able to, maybe if that business doesn't work for you, maybe they can find you another one. Most intermediary firms like ourselves the seller pays the fees. So now there are cases where buyers will come in and looking for a specific type of business, and then the buyer actually pays the fees. But those are few and far between, and it does happen. But unless you're very specific, it's more of the seller paying the fees, and then the buyer is just really finding the business that they want to buy. So, and be ready at the right time. And this kind of depends on where you're at in the process, but be ready to hire an experienced attorney and accountant. It is in your best interest as a buyer because you want to make sure all those closing documents and everything else are for you going forward. So it's better for you as a buyer to spend the money on the attorney fees, and that's in your best interest. So, and of course, having a good accountant, if you don't have one already, they can set up your books and make sure you're on the right path. So a little bit of just examples here. This one, I continue to shake my head at this one because it's a recent closing, and you notice there it has the no outlet sign, and it's a retail storefront for online antiques business. And I kind of go, that just doesn't look like it's going to make it, and maybe I'm wrong, and I can't remember where this was. I think it was in Colorado, but these are ones where you should just avoid. There's obvious problems with this. Of course, retail is a tough business to begin with, and moving on. There's a lot of businesses for sale that promise the moon and all the opportunities, but if the cash flow isn't there, then is that really a good opportunity or not? And not to say that businesses don't have good growth opportunities, but you need a baseline. And of course, you want to pay for what you're paying for as a buyer is for past performance, not future performance. I've been in the world of angel investing and all those other things. That's a wholly different type of world, and investing is different than buying an existing business. So you really need to focus on the numbers, look at what is equitable, and then if you can see potentials for growth, great. But and there might be a premium to say, hey, I could really turn this around or really go a direction with this business. But at the same time, paying for past performance and that trend of where it's going is really what really works and what banks will finance on. So a good example, and this is one of ours. This is a commercial vehicle repair business. You can see here we have a good photo that's up here. Of course, it's not a photo of their shop. It's just a stock photo because we're not going to expose the business because of confidentiality reasons. But you notice here that the numbers are all filled out here. Asking price right around 1.5 million, cash flow 445. So that's around just over a 3 multiple, which is about average for businesses like these. It's still growing as well. So you could see the write-up below there, well established, everything checks out, and you can imagine we've got quite a bit of interest in this business as well. And just a good example of one that you should see. Notice up here too, in the title, it says SBA pre-qualified. So that's another indication, because we want to talk to buyers that have talked to SBA before versus ones that are just trying to find a way to finance it outside of any traditional lending. So that's something too that's a good thing to look for, especially if you've talked to a lender before and you can come in and say, hey, well, by the way, I'm SBA qualified as a buyer up to the certain amount, and then if it matches what they're looking for, then that's a good indication that it could work out. So going forward here, on the business valuation side, there's 3 main areas that we look for business valuation. And again, every business is different. So through SBDC, we offer a free evaluation for the business you're looking at. So we look at fair market value of the tangible assets, and that includes equipment, inventory, and then of course you get into office space and real estate. Some businesses come with a real estate. All of us here at the firm that are intermediaries have a Colorado real estate license. So a lot of times will sell a business with the real estate, where buyers will come in and buy both the real estate and the business together, or buy the business first and buy the real estate maybe years later. The other thing we look at for in terms of assets are website, intellectual property, franchise. That has some value to it as well. We've worked with businesses that have patents and can look at how to monetize those. And then the other side is accounts receivable. That's something too. If you have a business that's growing very quickly, a lot of times the accounts receivable will continue. It's a cash flow issue sometimes, or how quickly they can grow. So that's something you want to consider too. And how much working capital do you need to grow the business? We look also at the cash flow adjusted profit, and this is a good thing to really understand as you're looking at businesses. There's 2 terms here, and the first term is seller discretionary earnings, and that includes the owner's salary. So think of that as you as a buyer are the owner operator of this business. You're going to have money you pay yourself, so the salary. You're going to have to service your debt, however you're going to finance it, and then you're going to want to make some sort of ROI. So that seller discretionary earnings is really, for businesses that are less than $1 million of cash flow, is really the standard in the industry, because most buyers that buy those types of businesses under $1 million of cash flow are going to be running those businesses. Now, the other term that you probably have heard more of is called EBITDA, earnings before interest, taxes, depreciation, and amortization. And that number is really for businesses that are higher than $1 million. And what that assumes is that it doesn't include the owner's salary, meaning it's someone else, the general manager, is running it. So it usually includes a salary that's market for that industry for someone that's actually going to run it, a general manager or something like that. So it includes a salary, but not necessarily the owner's salary, because the owner's salary can fluctuate quite a bit. And so EBITDA still could be calculated at low values. I mean, there's no hard and fast line of $1 million that it switches over. You could calculate SDE for $1 million plus cash flow companies, and you could calculate EBITDA for less than $1 million companies. And sometimes it does make sense, especially if, say, you have an absentee owner, then they don't have an owner's salary. So now we really are talking about EBITDA instead of SDE. So those are 2 terms to really understand. And the more you look at businesses, the more you kind of see how those are worked out. But be ready to see those terms if you haven't already. And market rules of thumb, a lot of times people try to value businesses based on what businesses like that have gone for, and that's really backing into businesses. If you're talking to an owner that's trying to sell their business and they're talking about valuing their business based on the gross revenue and what they, what their top line revenue was last year, that speaks nothing of profitability. So you could have a $2 million business that did $2 million in sales last year that puts off $500,000 in profit versus one that only outputs $100,000 in profit. And which one, both of them are going to be valued differently, right? They're not going to be valued at 1 times the top line revenue. So those market rules of thumb sometimes get into that. So yes, you can kind of, look at that, but most of the time you just need to look at the financials and go back up to your cash flow adjusted profit or your tangible assets to see what the actual value is. And then the other thing, you're looking at industry trends. As I mentioned, retail is very tough right now. You got Amazon and all the others that have pretty much taken over. So that's a hard market to be in. So we have to consider that too with the valuation. So give you an idea of what we call, this is actually a seller discretionary earnings. This is for a business I sold years back. And you can see the gross sales here are actually going down, but that it was on purpose because they were really trying to get the profitability up. They realized that they were actually doing some unprofitable type of businesses, some clients. So they actually moved the needle down on revenue, but actually built up the seller discretionary earnings. And you can see here, they've gone from 172 to 198, almost 200. And so this business actually sold for right about 2.5 times of the 200,000, just a little bit over. And it sold relatively quickly because they had done the work. And so when you start running these numbers, and this again is something we can do for, if you're looking at business, we can run this SDE analysis to look at it for you and start spotting some of these trends and see what the numbers really do show. So let's get into the today's market and the different segments here. And so we try to break down, and this is coming from quarterly reports that we receive from the IBBA. So they look at all of the aggregate information from the market and kind of separate this into different areas. So you have what we call Main Street, which is 3 different categories: less than 500K, 500K to $1 million, and $1 million to $2 million, and then the lower middle market, which is 2 to 5, and then 5 to 50. So most of our deals are in that 1 million to 2 million range. Some go above 2. We don't get over anything over 50 million. We'll go above 5 million at some times, but we've done deals less than 500,000 too. So we kind of use this as a check for us locally here in the local Colorado economy, but also just see what the trends are going forward and what to expect. So one of the reasons why businesses don't sell, and this is based on this analysis and just what people are saying out there. And I thought this was interesting because we see this quite a bit, that the sellers unrealistic value expectations. And this is a real problem. And if you ever talk to a business owner that has the wrong expectation or really high expectations of their business, they're very proud of it. They've spent, say, 30 years in the business, but they really haven't come to the point of understanding what the market is really saying. This is where a lot of businesses just don't sell. And we've seen this time and time again. And as much as you try to educate and try to get them to see that if they do really want to sell, they've got to lower their price a bit. And so this can be, it's got to be equitable. Of course, every business owner wants to get the maximum amount, but it's got to be in that window where it makes sense for buyers as well. And so I thought that was interesting that, on the Main Street, which is that, businesses under 2 million, this is the issue 60% of the time why they don't sell. Because remember, 1 in 10 that go to the market actually sell. Now, if a seller uses the business intermediary firm, that can go up. That percentage can go to 3 or 4 times better. Say 4 out of 10 or something like that for the amount they are going to sell when they're actually getting the help. But a lot of them are do-it-yourself, and so the average across the industry is 1 in 10, and this is the main driver here of the 60%, and then it dips a little bit lower for the overall market. And the second level there is the downward trends in the seller's business. It's very hard to sell a business that is down on the downward trend. because that affects their multiple. Now, on the flip side, if they're upward trend, then the multiple should increase. So there's things that we adjust for there based on those trends, which is why we look at the last 3 years. So this is interesting too, that with buyer locations, you can see here that with those that are in the range of less than 500,000, most buyers are within 20 miles of the location of the business, and then of course that goes down over as you get bigger and bigger. So that's again, if you're finding something that's local, say in Colorado Springs, then you're more likely to be able to buy that business. And I think especially in the Springs, people want to sell to people that are here or want to be here in the spring. So that works well, and the numbers make sense, and those trends are obviously what's happening today. So let's get into multiples here a little bit, because this question comes up a lot. It's like, okay, what is a business really worth? And I think I like this update because it shows the last 6 quarter threes. We get this update every quarter. We're going to get the update for quarter 4 here in about a month or two. And so this is looking back, but you can see here that the multiples for the for $500,000 or below, remember this is the purchase price, has been stagnant for the last really 3 years. It went up a little bit in 16, but for businesses that are selling for less than 500,000, the multiple on average is around 2. Now every industry has its nuances. Obviously every business, there's more value in it. I've sold businesses for near 3 multiple at under this amount based on the the type of business. Maybe it's in technology or different things. But for the most part, under 500,000, it stays pretty steady there. And as you go up, in the SDE, it goes up to 2.8 and then 3.3. And then as you get into the EBITDA numbers there, as I mentioned, now you're up at 4.4 and even 6. So that's where you really start to see the value multiples increase is over 500,000, and significantly. I mean, between 500,000 and 500 to $1 million, you go from 2 to 3, and then by the time you get to $2 million business, now you're up at 4 or 4.5, and then up to 6. So that's the way it typically works. Every business is different, but this is on average across all the industries. So the time to close, this is another thing that to look at. This is comparing quarter 3 2019 versus quarter 3 2018, and so you can see here now the months to close is the time it goes on the market to when it actually closes, and then the LOI there is a letter of intent, which basically means you have a buyer that is willing to basically put some terms together. And then you see for the smaller businesses, they're on the market for 7 months, and then, or I'm sorry, 6 months in 2019, and the months it closes 2, right? So then as you get bigger businesses, then the time on the market continues to increase, but the months to close, goes anywhere from 2 to 4 months there. So that stays relatively a tight bandwidth. A lot of times when we get an LOI from a buyer, it'll be, say, within 90 days, they're looking at closing. So that's 3 months. And, sometimes it takes some time working through the attorneys and everything to get to that point. So that's where we're at in terms of the timing on this. Of course, every business is different. We've had businesses that have sold that have been on the market for over 2 years. And we've had businesses that have sold in just a couple months or haven't even gone to market, where we'll actually match the buyer and the seller. In fact, this past year, I had a business that they tried to sell on their own and couldn't get to work with 2 different buyers. So we had talked, and he tried it and came back. And when he came the first time, I got to know more about his business. And in the meantime, a buyer came to us and came in looking at one business, but realized it was a little bit too big, and came back. And we had, met for coffee. He was a local buyer. Got to know him a little bit, and when this other seller came in, I said, "Hey, this looks like a business that you could, kind of fit your profile. Why don't you guys get together in a room?" And we had him here at the office, and sure enough, they talked and agreed that this was, we didn't have to go to market with that business, and he was willing to buy it. So, and that happens. It's happened. It doesn't happen often, but it does happen. So as a buyer, it's always good to get your information into a firm that's talking with sellers so they can match that, that type of business with you. And the more detail you can provide, the more you can kind of discuss what you're looking for. Sometimes maybe the next day that, they get a call from a seller that says, hey, I want to sell, and do you have any buyers? And you can at least try to match that. We can at least try to match them up, and before he even goes to market, versus going through, all that process. So that really shortens the time frame, as you can imagine. So, I'm actually, there's a lot of different, pathways and some rabbit trails that you can go down on this in terms of on how to buy a business and what to look for. I can tell you that it definitely takes time, and the more patient you are, the better. But the real specifics get into, how do you get that back and forth going with the seller, and how do you just continue to develop that relationship? And so, as we work with the SBDC, we work with a lot of buyers that come through SBDC to talk and just kind of look at a specific business and help them evaluate it. So that's what we do. It doesn't really take that much, and there's a lot that can be kind of up in the air, and a lot of questions you may have. But we understand that, and that's that's a service we want to provide to really help out. We love seeing businesses, small business, being successful, especially for the local economy, and seeing good, well-intentioned owners getting in and really running a business, creating jobs, and making just growing the local economy. So we look forward to talking with you again. If there's any specific questions, you can contact me directly. The information is on the site. It's on the SBDC website as well. And at this point, we have some affiliations and credits that we have here with the IBBA, M&A Source, and the School of Business at Pepperdine, and some private capital groups that help put this together with some of the stats I showed you. So at this point, I'll open up for any questions or further discussion, and I appreciate your time.
All right, thank you, Rob. Appreciate your time. We will leave this open for a minute here for questions. Meanwhile, I just want to remind you that the next step, if you are interested in consulting about buying a business, is to go to the Pikes Peak SBDC's webpage. That's pikespeaksbdc.org. And if you click on the consulting tab, you can actually request an initial appointment if it's your first time, or request a follow-up appointment if you have been consulting with us before. So the SBDC does offer free confidential one-on-one consulting through the life of your business, and it is a great opportunity to get your specific needs met and questions answered related to your business or the prospect of buying a business. All right, I don't see any questions here. Any last thoughts, Rob?
No, I hope this was informative, and yeah, any type of specifics, questions, I'm here to help, and yeah, look forward to speaking with you.
All right, thanks, Rob. And in addition to Rob, there are several other consultants. There's about 40 consultants at the Pikes Peak SBDC that are here to help, and different subject matter experts, including business valuation, selling business, buying business, etc. So thank you so much for joining us, everyone, and we will see you next time. Have a great day.